watching the market right here in 18 hour with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash in the studio. And for our markets, we will of course get you more highlights from the ET summit that took place over the weekend, and we will get you more highlights of what the Prime Minister and other dignitaries spoke about. But that said, for the market then, this morning, we did test that 18K mark in the week gone by, couldn't quite sustain that mark, however, unfortunate as it may be. So just looking at the market texture then this morning, and what is it that it's going to, chase the market in terms of cues, and just we've managed to close around that 18K mark, didn't quite latch on to that. But having said that, we've managed to outperform, Nikunj, the other global market and Asia peers in particular. I was just looking at the movement for a Japan, for a Hong Kong, which was down 2.25%, China, which was down nearly 2%. We managed to pull up a gain of almost 0.5%. Of course, this is just the first week of outperformance. Let's see which way this trend heads.
No, Aisha, I think last week was... You can, if you want to be in compulsive bull, you can draw a leaf and say, okay, there was an inflation scare and Indian markets did well for ourselves and foreign institutional investors were net buyers. But frankly, last week's price action may not be a clear endorsement that the bulls are out of, the bulls are back and the bears would be running for cover. Luckily for us, the impact of inflation has not been felt at global level and at the local level. You want to remain constructive simply because the benchmark indices have not broken down. You want to be constructive because foreign institutional investors are buying, but the market now for next 2 or 3 weeks is going to be completely dependent on flows and technicals. We don't have any large calendar events. Earnings season is behind us. The Adani sell-off, which in a sense caused a dislocation in individual stocks, that also seems to be settling down now. So now it's about sentiment, it's about technicals, it's about demand and supply. There are no triggers on the upside which will generate momentum. The bearish narrative also has not really managed to hit the market a lot. So you want to approach the market with the view that, okay, whatever could go wrong has gone wrong. Now let's take and let's revisit the classic stock picking. So I will not be surprised that next 2-3 weeks you may be back to what is called as basic hard work and stock picking.
Yep, and in light of the fact that we've also got the expiry this week, so that is something that will be tracked. But let's also just quickly sum up what we saw across the US markets. It was a pretty tempered close for the Dow Jones, third straight week on the trot that we wrapped up in the red, and for the S&P 500, second straight week. You had the 10-year Treasury yield as well that hit the highest level. This is after the robust US sales data. And of course, we'll be watching out for some commentary coming in from the US Fed later this week. Asian markets as well looking a bit mixed, and do remember today we've got the US markets that will remain closed. But just speaking of our own markets and talking a little bit about the F&O positions, and it's interesting because the net short positions that we're seeing in F&O is at about 77% currently versus an average of 60%. And Nikunj, the FPI short contracts as well are at November 22 highs.
Yeah, so let's understand what that means. That means the FIs are buying in the cash market, but they're also hedging in the F&O market. Since you have an expiry later this month, you could make a case that the FI positioning right now is so short that if there is little bit of change in terms of the positioning, or if FI buying continues in the cash market, that could lead to a bout of short covering. So while arithmetically we can talk about foreign institutional investors are back in the cash market and we've seen a streak of about 4 days, but the positioning in the F&O market has not changed at all. The good bit here is that when everyone is on the same side of the boat, that trade rarely plays out. The bad news is that foreign institutional investors are back, but they're not really on board when it comes to covering their positions in the F&O market, which means they are completely hedging. Historically, when the data in the F&O position has gone above 70%, that has led to short covering. So let's hope it plays out, because everybody is on the same side of the boat. Indian markets are holding on. There are no triggers. The macro scare is behind us, and the Adani group sell-off also, in a sense, which dislocated the stock prices, also is now behind us.
Okay, look at the SGX Nifty, and that's indicating a bit of a muted start, although with a positive bias. So let's see which way the day actually heads, considering on Friday we gave up that high point of the day and closed in lower by about 0.5%. But at the Economic Times Global Business Summit 2023, Nouriel Roubini spoke about three factors that will help India overtake China as the world's biggest economy. Let's hear them out.
It's always great to come back to India because this is a strong democracy and a strong economy. And actually, I do believe that India could become the most important country in the world over the medium term. I think there are three factors that are going to lead it. One, you have a population is now the largest in the world and is young and growing, and that's a source of high potential growth. Secondly, your per capita income is still much lower than the one of China, about a quarter, but that implies that with the right policy, potential growth can be 7% or even higher. During the last few decades, China was growing faster than India. In the next few decades, India is going to grow much faster than China, so it's going to become a strong economic power. And three, India is going to also become a major geoeconomic and geopolitical power, first in Asia and globally. And as we know, there are geopolitical tensions, and one of the rising powers in the world, even from a security point of view, is going to be India. The economic threats, they're very different in many ways from those that we're facing even a few years ago. For example, until 2 years ago, in most advanced economies, there was worry about lowflation, if not deflation. Central banks had a hard time to achieve an inflation of 2%. Inflation was persistently below. Today, instead, in advanced economies and even emerging markets, we have to worry about inflation to be too high rather than too low. And inflation has been significantly above the 2% targets in advanced economies. A couple of years ago, we were worrying about what people refer to as secular stagnation, a situation where there were excess savings, low aggregate demand that led to weak economic growth, but also to lowflation, if not deflation. Today, we have to worry about the opposite phenomenon, the risk of stagflation, situation where you have inflation and potentially recession at the same time in advanced economies because there are a number of aggregate negative supply shocks that are eating economic growth while raising the cost of productions.
Lots lined up today on the show, but time to connect then with our technical analysts. We've got Kunal Bothra in our studios as well as Naresh Merani joining in. Well, Kunal, we wrapped up last week around the 18K mark. Yes, we managed to outperform our peers, but what's the outlook on the index? Because it seems that, while it was touch and go with the 18,000 mark, it's a listless sort of week lined up for us in expiry.
Yeah, it's been a listless week for the market so far over the last 1 or 2 weeks. No major price action for the indices. I think yes, there was a couple of days of movement for the Nifty above the 18,000 mark, but again we've not managed to hold on to those levels. No major cues, in fact, even on the open interest front, because I think after just that one day where there was a significant amount of unwinding of Nifty open interest, there's hardly been any major change. So the net open interest change is now in thousands as compared to lakhs. So that itself tells you the lack of participation for the index traders as such overall. The only solace of comfort for the market so far is that the March premium for the Nifty is still at 100, I think 120 odd points the last I'd seen on Friday. So that indicates that the expectation is again on the bullish side for the indices. We would probably expect 17,800 to remain more or less a pivot range for the index, and we could probably be swinging 200 to 50 points in that kind of a time span. So I think 17,800 remains to be a pivot. Till the time we're trading about those levels, index traders can maintain the bullish stance. But again, the action is more stock specific rather than on the index front.
Okay, that's the view coming in from Kunal. Naresh, what about you? Do you concur with that assessment? What's your outlook as to how we're likely to wrap up this expiry?
So we are still stuck in that big broad band. We are back into that zone as such. The momentum is not great, but for now, 17,800 remains a price point, which will be the first indication that momentum can still continue. We tried to cross that budget day highs, but did not see a follow-up price action. But we've not seen a correction also quickly. So overall, time to be more stock specific, like Kunal said. And what we are in a situation is, till the time we are in this range, we have to be very strict with the stock specific positions rather than looking at the index, because the index is not giving much opportunities.
Something that Nikunj was alluding to as well at the start of the show, the fact that now we'll have to really hunt for individual stocks as a strategy. So in light of that, let's find out what our chartists have picked out. And Kunal, what makes it to your list?
So I'll back on the energy sector, which I discussed on Thursday and Friday. Two stocks in that space. The first one is from the PSU pack, Coal India. That's a stock which is now completing a bullish flag pattern. It's a 12 to 13 rupee pattern on the short-term time frame chart. So would suggest a buy with targets of 226, stop loss at 212. And Reliance Industries remains to be a stock which is still buoyant. On Friday's trading session, the stock closed marginally positive, and that's a sign of mild outperformance, I would say. 3-4 days of strong up move from those 2,300 levels indicates that the stock has upped its base. Would suggest a buy with 2,500 as a target. Stop loss revised slightly higher to 2,360.
Right. Okay, Naresh, what about your stocks?
So first is a buy on ONGC, which has continued the momentum yesterday also, and the stock is back above the prices where it was on the windfall tax day announcement. The stock is showing good momentum and price volume action. Expecting this to go back to 180 levels, stop loss at 148. Second is a buy on Wipro, which is a risk reward trade. The last 2 week lows are around 400. The stock has not seen much of a recovery compared to the whole IT sector. This could be a catch-up trade going forward. So a stop loss at 398 and a target price of 440.
Looks like our experts are clearly favoring a lot of large cap energy names, but of course there's Wipro as well added there in the mix. All right, let's find out then some interesting commentary as well from some of the big global voices. We've got Anisha here to sum it all up for us. Morning, Anisha.
Hi, morning. Well, it's actually more of the same coming in, wherein all the global experts are talking about how Fed has a tall task ahead of itself, and that reining in inflation around 2% would be really difficult. Let me start with the comment coming in from Mohammad Dalarian, when he says that the Fed won't be able to bring down the inflation to its 2% target without crushing the economy. We need a higher stable inflation target, which could be close to 3 to 4%. Lawrence Summers also has a similar view. Now, he says that the Fed is trying to put brakes on the economy, but it's like a fast car which is trying to see a sharp braking, and that can have two impacts. First is the inflation pressure, and that would mean that you are setting yourself for some sort of collision or crash down the road, and there are real risks to the economy at this point of time. He points out that the economy is still very strong. You have the highest ratio of vacancies to unemployment. The retail sales are on the fire. The economy is creating jobs faster right now than the population growth. And even if you look at the broadest measures of inflation, the median inflation component is at the highest rate in 40 years, running close to 7%. So talking about how the economy is strong at the moment while inflation still continues to be quite hot. Peter Schiff believes that it took Fed almost 12 years to bring down the inflation to 2% level in the 1970s and 80 eras, and he's talking about how this time around as well it might take much longer for inflation to come down. He talks about how the Fed rate is at 4.6% at the moment. It has a long way to rise going forward as well, and the Fed won't be able to rein in back without creating a worse financial crisis than the one created in 2008. So the Fed will surrender long before the inflation returns to 2%. So either of the two is possible. Either the Fed surrenders or increases the inflation target.
Anisha, we'll leave it at that. In fact, on that note, we're going to take a very quick break. The S6 Nifty still very, very tempered. Over the week gone by, we've seen a 0.5% gain and managed to outperform specifically our Asia peers. So let's see what this week throws up at us. For now, we'll take a very quick break.
Welcome back to the market. More news in the spotlight then. And the Finance Minister Nirmala Sitharaman on Saturday announced that the GST Council has given its approval to clear 16,982 crores balance of compensation to states. Further, the council has reduced the GST on liquid jaggery, pencils, sharpeners and certain tracking devices. Let's hear out the Finance Minister.
Two GOMs reports have been accepted, one slightly with modifications and also with an understanding that we'll have one or two small amendments to be done in the language with which it will be brought into the bill. But equally important is the fact that we've announced today that the entire due on the pending balance of the GST compensation will be cleared as of today. All dues, that is, because I'll just take you back for a minute. As of May 31st, we had cleared all the dues. There was something left in the name of dues for June. Even that is getting cleared. In other words, the entire pending balance of the GST compensation, which is to a total of 16,982 crores for June, that is, will be cleared. And although this amount is not really available in the compensation fund as of today, we have decided to release this amount from our own resources, and the same amount will be recouped from the future compensation cess collection. So the amount is not with us, but we are still giving it with our own resources, and the total which is being given out is 16,982 crores. With this release, therefore, the centre would clear the entire provisionally admissible compensation cess dues for 5 years as envisaged in the GST Compensation to States Act 2017. In addition, of course, centre would also clear the admissible final GST compensation to those states who have provided the revenue figures as certified by the Accountant General of the states, and that amounts to 16.
There's also a word coming in from Nitin Gadkari, Road Minister, who spoke at Economic Times' Global Economic Summit 2023 and highlighted the importance of infrastructure to receive capital investment and generate jobs. He also spoke about where he sees India's infrastructure headed in the near future.
The vision of our Prime Minister is to make India as Atmanirbhar Bharat. The target given by the Prime Minister is of making of economy of $5 trillion. And now presently we are the fastest growing economy in the world. Anywhere for any industry, trade and business, infrastructure is very important. The water, power, transport and communication, without that we cannot develop industry. And without industry, we cannot get capital investment. And without capital investment and industry, we cannot create employment potential. So basically, the world-class infrastructure is a challenge and is a mission for all of us given by the Prime Minister. So creation of infrastructure of international standard, this is one of the important tasks, and particularly I am related with the road ministry, and I am confident that at the end of 24, our road infrastructure will be equal to the US road infrastructure. That is to be target in my mind. Presently, the most important thing related with the economic activity that our logistic cost is 16%. China, the logistic cost is 8 to 10%. In the European country, it is 12%, and the USA, it is 12%. So target is to take to this logistic cost up to single digit. That is to be 9%. And for that reason, we are planning for making of big highways where 100% we can save the fuel and time, by which we can reduce the cost.
Big voices there, and you also had Ashwini Vaishnav, the Minister of Railways, Communications and IT, saying that India has seen its fastest deployment of 5G in the world, adding that India will become a major telecom tech exporter in the next 3 years. Listen in.
Great pride. Prime Minister launched it on 1st of October 2022. Within first 100 days, we have covered more than 200 cities. And recently at Davos, the industry leaders actually gave statements, and they were published in Wall Street Journal and all, that this is the fastest deployment happening anywhere in the world. But what gives bigger happiness? What gives bigger happiness is not just the pace of deployment. It is the development of India's own 4G and 5G technology stack. The stack is now ready. It was initially tested for 1 million simultaneous calls. Then it was tested for 5 million simultaneous calls. And now it has been tested for 10 million simultaneous calls. Phenomenal success. Today, there are at least 9 or 10 countries which want to try it out, and it will be rolled out. And very happy to share with all of you Prime Minister's vision of making India as a telecom technology exporter. Today, there are 2 Indian companies who are exporting to the world, telecom gear. Coming 3 years, we'll see India as a major telecom technology exporter in the world.
Okay, let's talk stocks and let's talk sectors which are going to be active this Monday morning. In the latest Nifty Rejig, no changes are expected in the Nifty 50 index, the Nifty Bank, or the Nifty IT index in the latest MSCI Rejig. But Sharad is here to tell us about which companies could see more inflows and outflows.
Well, yes, in focus we are having the Nifty Indexes Rejigs, and do remember the adjustment date would be March 29, but the effectiveness would kick in from March 31st as well. And as stated, is in line with expectations. As for Nuvama, is the entire status quo has been maintained for Nifty, Nifty Bank and Nifty IT Index. But now let's look at the Nifty Next 50 Index, where they're expecting certain inflows coming in. The stocks which would be in focus would be Varun Beverages, Page Industries, ABB, Canara Bank, and even Adani Wilmar, where they're expected to have expected cash flows ranging between $9 million to $35 million. And even if you see the average daily volumes over there, also gyrations are expected, especially between 1 to 2 times of the 20-day average. Now let's look at the outflows, what we are expecting. And as per Nuvama, the certain companies such as Mphasis, Bandhan Bank, Bicon and Gland Pharma, they are expected to have a combined expected outflow ranging between 11 to 20 plus $1 million outflow. And also making it to the list, we are having Paytm, where an $8 million of outflows is expected.
Okay, and Sharad, we've also got then the FTSE, which is going to rejig the global equity index. So walk us through some of the key inclusions and exclusions.
Well, yes, it's an important update coming in, and do remember the changes are effective coming in from today itself, which is your 20th February, and this is a semi-annual review. And first of all, let's point out the key inclusions coming in for the global large cap index, and of course first one being ICC, and Kotak Mahindra Bank has also made it to the list after 9 years. Apart from this, other banks include Canara Bank, IDBI Bank, Yes Bank, Union Bank, and also stocks such as your GSPL, Shriram Finance and Tube Investments. Now there are certain exclusions also coming in the large cap index, which includes names such as Bicon, Godrej Properties, Jubilant Foodworks and Piramal Enterprises. But now let's look at the broader portion and the broader picture. Now the key indices which actually are there, especially the stocks which are included in the mid cap space, they includes APL Apollo Tubes, Patanjali Foods and Vedant Fashions. While in the small cap indices, if we talk about it, there are inclusions such as All Cargo Logistics, Craftsman Automation, Kalyan Jewelers and stocks such as RHI Magnesita. But there was an important commentary also coming in and over here on Adani Group, and they have stated two important things. First is, of course, the intention is to proceed with the scheduled index review as it is planned earlier for the changes in the Adani Group stocks, and secondly, they continue to monitor the entire situation happening on the Adani Group situation. And apart from this, do remember, if you remove NDTV, all the other stocks from Adani Group are listed in the FTSE indices.
So in your definition in this market where things are reasonably priced, what is cheap and attractive?
Two new sectors that we've been trying to bet on is particularly some of the defense and railway PSUs. And given the government's capex push in railways particularly, I think there's some very cheap stocks, I'll use that word advisedly, cheap stocks in the railway space. And if you notice the last few days, there's been a lot of noise of India becoming an export powerhouse in the defense sector.
Okay, let's talk stocks. And Cipla has confirmed that the US FDA has issued Form 483 with 8 observations after inspecting their Pithampur-based manufacturing facility. In fact, the US health regulator has conducted a CGMP inspection from February 6th all the way to 17th. Pankaj is here to tell us more about the findings. Pankaj?
Well, it came in as a negative surprise that there was an inspection as far as their Pithampur unit is concerned, and 8 observations were issued under the Form 483. So that is something which has come in new. Now, why this is important is because it was a fairly long sort of an inspection of about 7 to 8 odd days. It's an important facility as far as Cipla is concerned. In fact, it is one of the most important facility after the unit in Goa, at least for the US business. Now, why it is particularly important is because the company has not given any nature of observation, so we'll have to wait for Form 483. It generally takes about a week or so as far as Form 483 is concerned. And generic adware, which is one of the most important launches scheduled for Cipla in April 2023, comes in from here. It can contribute about 5 to 6% of the numbers. Currently, Goa, which is the first important US plant, is also under warning letter, and that's why it becomes quite important. Any escalation as far as this Form 483 is concerned can impact earnings, and that's why it's a news which is developing as the Form 483 gets public. But it is something which is which will be tracked by the street pretty closely.
Okay, let's also hear it out then from Dipan Mehta as to why he continues to like and be bullish on Mahindra Holidays as well as Indian Hotels.
It's better to buy the hotel companies. I think look at the way Indian Hotels reported, what kind of numbers they have reported, and some of these smaller hotel companies as well. And I would say that that's a better way to play this particular investment theme rather than the aviation sector. The hotel industry, there is anyway a crunch when it comes to capacity. It is not all that easy to increase hotel capacity. It takes at least 3-4 years to build new hotel rooms. So that's the way we'd like to play it. Another company which comes to mind is, of course, Mahindra Holiday, which is a vacation company, and that also has reported decent numbers last few quarters or so, very attractive valuations and a lot of cash on the books as well. So I think that's the way to play these two companies, rather this particular sector per se.
Okay. AGX is absolutely flat, which means that we'll walk into trade this morning and you may not see any kind of large triggers per se, which really will generate upside momentum for next few days. And that is something which in a sense needs to be marked. I also want to point out Indigo, because the block deal in Indigo has happened, and because of that block deal overhang, the stock in a sense has done precious little, so to speak. Nuresh, things are falling finally right for the aviation sector, but the overhang of the block deal, do you think could be an impediment for Indigo going forward?
So that has been the problem for the stock. So if you look at it, the stock is available at the same prices where the last block deal also got done, and which was almost back in September. So what is happening right now is aviation. So whether it is globally or India, a lot of stocks are doing really well. So global stocks have also done well. Indigo, the problem remains, and the block can continue to keep coming. So I think post this block, there is a 90-day lock-in. So for 90 days, we may not get the next block. But moment the 90 days were roughly over, we got back towards it. So in this case, basically, 1700 to 1750 is a support. So if this continues to drift lower, closer to 1800 to 1750 is the zone one should actually be looking into buy. Because irrespective of the block at that prices, the stock could make a bounce back from. So if there is a sharper knock from here, it would become an interesting buy.
One stock which has done rather well last week was actually Tech Mahindra. Again, that good old buzz that we will soon see a change of guard at Tech Mahindra. Now, markets, the management officially has indicated that by December 2023, hopefully, we will hear an official announcement. So that's still a distance away. But markets are speculating that there could be a change of guard, and historically we've changed change of guard. It really matters whether it is FMCG or banks or whether it is IT. IT in particular, it has mattered a lot. Vishal Sikka versus the Salil Parekh regime, Vivek Paul versus the current regime of Wipro. So historically, for any company, the person at the top matters. But for technology and for some of the niche pockets where you can really make a lot, financials, tech, these are areas where it is imperative. With the consumer company, the change of guard may not be that great. Why? Because those are brands which are built to last. But when it comes to specific businesses, which are more to, which have got more to do with culture, lending, ability, adaptability, understanding of the global macro, technology, banks, like I said, for these two sectors, the leadership team is always an important benchmark to understand where the stock in the short term is headed. Sandeep Sabarwal is ready. Can we connect with him? Good morning, Sandeep. Let's understand Tech Mahindra. It was the outlier last week. And again, that good old buzz that soon we will hear a new name and Tech Mahindra could get a new CEO.
But I think stocks moving on something where, so obviously some new CEO has to come in. So who it will be, how it will drive the company. And we've seen historically also that once new CEOs take over, it takes some time for them to actually get established and push growth forward. So my guess is that it was more also a bounce back from levels which it had reached, because last 1 year there was a severe sell-off and then it's bounced back. So I wouldn't read too much into it actually.
Okay, wouldn't read too much into it, and we've seen a pretty smart rally in Tech Mahindra over the last few days. But let's hear it out then from Ramesh Damani. He shares his advice on how one should invest for the long term, especially for first-time investors, the youth who are entering the markets. It's interesting pearls of wisdom. Listen in.
We can invest small sums of money for the grandchildren on their birthdays, and we just leave it unchanged for the next 10, 20 years, at least till they reach college age. And, they'll have a legacy, if I'm right, that the grandfather did something for them and the grandmother did something for them. So the first point I would like to mention, because this is a great idea, because if you look back at the last 30 years, people who invested very small sums in India, at 1,000 level of the index or 1,500 level of the index, or even at 4,500 of the index, the March 92 when it topped out in the 92 bull run, still have made out like bandits over the years. Some have made 50x, some have made 75x. In the last 30 years, you could have done any number of things, but you remained invested in equity, you actually became rich. So with the belief that the past is going to be prologue and what happened in the past will continue happening in the future, that the Indian market remains to be excited, I think it's a good idea to, I would strongly think it's a great idea to invest for your grandchildren. Now, what do you invest? I mean, if you're someone who has no time to follow individual stocks, it's very simple. Buy an index tracking fund. When the market corrects, buy a fund that tracks the Sensex and Nifty. Keep it for 30 years. If the Sensex doubled, you double the money. If the Sensex goes up 5x, as it has in the last, say, 10, 15 years, you'll make 5x your money. So it's a great thing to do that. person like me who's more interested in capital allocation, more interested in finding stocks, we try and find stocks that are gleam in the eyes, small caps that can become mid caps, or perhaps even large caps over the next 10, 20 years or so. Unfortunately, the SEBI regulations. I can't discuss names with you, Nikunj, but I would suffice you to say that I have been doing it, and I'm finding things that I want to hold for 10, 20 years, and hopefully they'll be right, and they will be a mother lode of value for my grandchildren at the end of the rainbow.
But when you're investing for your grandchildren, Mr. Damani, I'm sure you are more than companies, you are betting on themes, because that's what investors can do. You cannot specify 20 years down the line which company will make it big, but you can certainly specify that that area in which you are investing in, that area or that business or that sector could become big. So can you throw more light on that?
Yeah, I mean, we bought, to give you examples, some consumer companies. There are, just without giving names, there are watch companies that are trading at, not the Titans, but the other ones are trading at, fairly, reasonable valuations, which seem prospects look good. There are, fintech companies. Finance is going to be a very important part.
Ramesh Damani there, continuing to advocate investing in equities as a long-term strategy. All right, let's get a move on then. Stocks that are on the editor's radar, let's find out and discuss them in great detail. Well, in today's trading session, we're talking about United Breweries and Shriram Transport. Let's begin then with United Breweries. It's in the spotlight in trade as now the CEO, Rishi Pardal, has resigned. He's been associated with the company since the year 2020, and for the past 10 quarters as well, he's been associated. And Nikunj, the average volume recovery as well that we've seen has been at about 90% since pre-COVID.
Yeah, I think Mr. Damani just spoke about investing in liquor stocks. And here's one company to give you, just for the benefit of our viewers, United Breweries has the Kingfisher brand. They represent the beer business. They're the largest beer company in India. Hot summer kicking in early, but the beer business is not getting back to its peak. That's because the beer business is now getting challenged because of new disruptors and microbreweries, at least in some of the metros. Bottom line here is the stock has not lived up to the expectation. Second, the change of CEO. Is it compulsion or is it by choice? When you have a change of CEO just after 10 quarters, it just makes you wonder that is the management now pretty much endorsing that things have not really worked well for the company and they really need to change there? If yes, why have they not worked? It's a stock which has underperformed. It's a stock which has really fallen off the radar. And when you typically get a news like this, it's just going to make you wonder why. It's been an underperforming stock which frankly is losing market share for a category which was always supposed to grow. And you can talk about summer kicking in early. We did a discussion last week that summer is early, so more AC sales. Well, if summer is coming in early, apart from cola, beer will also sell, but that's not happening.
Yeah, and we just saw those absolutely flat returns on United Breweries, so this will definitely remain in the spotlight. Now let's move on and talk about Shriram Finance. It's on the brokerage radar in today's trading session, as well as we've got Morgan Stanley that's come out with their latest note. They've maintained an overweight rating. They've got a target price at about 1580 rupees. They're talking about strong fundamentals as well, saying Q3 surprised, and there have been a lot of revisions as well.
Yeah, the fundamentals have improved for Shriram Transport, but the discount between the peer set and Shriram Transport has only increased. That the company is delivering, and if post the merger return ratios and book value is going to increase, it should be going higher. But why has the discount between Shriram Transport and peers has increased? I think Morgan Stanley is making that point that it's largely because of a technical factor, which is the supply, which clearly seems to be there. Like we've seen in case of Indigo, the numbers were not rewarded, even though they came out with record profits for the quarter gone by, because markets know that one of the promoter is selling. That is the case with Shriram Finance, that there is a large oversupply of erstwhile investor, which is really jamming the stock from any free movement, so to speak. Now that's a technical factor. So Morgan believes that if you are one of those guys who does not think in terms of days and weeks and months and quarters, it's a stock which you can buy and hold. Like that Hero Honda ad, fill it, shut it, forget it. One of those stocks. Buy it, don't worry about the near-term volatility, because this is a business which once the technical overhang is over, the market will discover its fair value.
All right, so hold on for the long haul and forget about it. That's a word coming in on stocks on the editor's radar. Let's hear it out then from Neeraj Diwan. His top fundamental stock call is Godfrey Phillips. Why is that? Let's find out.
first 9 months, we've seen good growth, volume growth in the tobacco business domestically. And even the global business, that is the export business, has seen good growth because of good growth from the tobacco leaf business that they export. And the domestic business, which is the non-tobacco business, has also seen a 20% Y-on-Y growth in the 24/7 sales. So I think this is more because of the increase in mobility post-COVID. It's a debt-free company which has cash. If you consider the investment it has in mutual fund, so there's no debt on the books. And the future strategy is to grow all the three businesses: the domestic tobacco business, the international tobacco business, and the non-tobacco business as a 24/7 retail stores. So all three will see decent improvement going ahead also. So if you fairly see on valuation, even if you value it at 15 times 1 year forward, which has been the historical valuation, the stock can give you a 30% return from these levels. So I have a target of 2,300 for this for 9 months, 9 to 12 months.
Okay, we're in conversation with our technical experts, and we've got Sandeep Sabharwal as well. Sandeep, last time when we met, you spoke about a new stock and something which we've not heard from you, Mayur Uniquoters. Now, this stock did exceedingly well a couple of years ago. It ended up becoming one of the biggest multi-baggers. And just to give a backdrop here for our viewers, it is essentially a company which is in artificial leather. And if auto sector does well, they will do well because that is the business they are catering to. Is that the logic, Sandeep, that you're bullish on auto, but it is time now to buy an auto ancillary company? I mean, it is an ancillary at the end of the day.
Okay, the reasons are different. It's more to do with them winning global supply contract from large auto OEMs, which will start next year and keep on growing for the next 2-3 years. And Mayur used to be a very fancied company earlier, used to trade at 30-40 PE. In fact, if you open the chart and for the last 10 years, you'll see that the stock is more or less at the same level where it was in 2014-15. So I think it's gone through a long phase of consolidation, some tough times, etc. And now it's on the verge of coming out of them and doing well. So valuations are cheap, earnings growth should be strong over the next couple of years. And I think that's the main theme. So it's less to do with an overall auto revival story rather than the company actually gaining market share and capturing a market which is moving away from natural leather to high quality sort of PU artificial leather, where most of the global OEMs are moving to.
Sandeep, whether it is a EV or a CV, or whether it is a combustion engine, which is ICE, internal combustion engine company, car mein seats to lagega. So might as well buy companies which essentially are making tires, making headlights, and making seats. I mean, it's a very simple way of looking at the growth, isn't it?
It is because the simpler the product, the easier it is to evaluate. So I think the more it gets into electronics, etc. So then it's tough to evaluate those companies and see where they'll actually go. And once a company is moving towards supplying to large companies like Mercedes, Volkswagen, etc., then obviously you get much more per seat from if you were supplying to, let's say, Maruti. So because they are premium cars, so obviously your realizations also improve. So even if the volume growth is lesser, the value growth will be much greater.
Okay, that's the view coming in. But in the meantime, let's also get in, Naresh, your thoughts on the stocks that we just discussed. United Breweries, want to just understand how you've mapped out the charts for the last few months and what the outlook is, as well as Shriram Transport, are largely on the back of Morgan Stanley's overweight rating report.
So United Breweries is something which has trapped a few times in terms of breakouts. The stock was trying to break out into an all-time high at 1750 odd levels, did a breakout, and then flopped out right away. If you look at today's prices, the stock is at 1450. It was at the same prices in 2018 and 2019. So the stock has done nothing for the last 5 years. So it's been a major disappointment in terms of price action. Even now, say the stock is available at the same prices it was in 2021 and 2022. So technically, it's tough to take a call that whether it will bounce back from here. Even if it bounces back, how fast would it be? So in terms of a trade, it becomes extremely difficult to trade this one. So that would be an avoid. Shriram Transport, on the other hand, watching out for it to actually show some momentum. That is another stock which has gone sideways. So both these stocks remain sideways.
Okay, NMDC Steel, that's going to be listing today on the bourses. Analysts believe that the stock could get listed at about 30 rupees per share. Let me take it across to Vamakshi and get in more details.
Well, absolutely. NMDC Steel is expected to get listed on the exchanges today, and this listing is coming pursuant to the demerger from NMDC Limited, an approval for which had come back in October 2022. Now, this was already reflected in the share price when NMDC started trading exit steel business on 27th October 2022, wherein we saw that the stock price fell by nearly 30 per share. Now, something about NMDC Steel, well, it has an integrated steel plant in Chhattisgarh with a greenfield capacity of nearly 3 MTPA. Now, NMDC Iron and Steel plant is also under construction and is likely to be commissioned by March 2023, on which the total capex on the steel plant could be around 22,000 crores is what the company has estimated. Now, in terms of valuation, analysts believe that the stock could get listed around 30 rupees per share. The stock is expected to trade at 0.4 to 0.6 times its price to book value, and the book value of the share is estimated to be around 58 per share. Now, another important factor which could be a key trigger for the stock going ahead is the fact that Government of India has sought bids in order to sell nearly 50.8% stake in NMDC Steel. Now, the government currently holds nearly 60.8% stake, and in fact they believe that the management control is also to be transferred to the buyer. Multiple EOIs have already been received for the strategic divestment of NMDC Steel. That is what an official statement from Deepam is saying, and clarity on this stake sale could also be a key trigger for the stock. So as of now, NMDC Steel will be in focus on the back of their listing today.
SGX is up 32 points. Are we in for one of those days that we'll start up and then just come down again? US markets are shut tonight, which means that today we will not get a Q from Dow futures. We will not get a Q again from US markets tomorrow morning when Indian markets will open. Nuresh, if I look at the FI-FNO positioning, the FI-FNO positioning, at least for foreign institutional investors in the FNO market, is largely on the short side, and the positioning currently is above the average. And we look at that number. The average FI positioning in the FNO market is about 60%. Right now, the short positioning is 70% plus. So, Nuresh, if there is little bit of buying and little bit of short covering, do you think the tides could turn?
So that has been the view for some time, but we've not seen that momentum come off. So we saw that tick above 18,000. We just went 100, 150 pointer higher. I expected it to go continue until the time we are above 17,800. I expect this to continue towards 18,200, 400, ideally in this case. But the momentum is not strong. Ideally, after such a short position and prices holding on, we can see a short covering rally towards 18,200, 400. For now, that is the view. We need some trigger, and none of the triggers have actually made a difference. We are still at, so for the last many months, we've roughly been around 17,800 to 18,000.
Right. Just looking at some of the active movers from Friday, and it was definitely all about cement all the way. Ambuja, Ultratech, Shree Cement, JK Cement, they were the ones which were really powering up ahead. Sandeep, cement is coming out of a long patch of consolidation. You think merit in looking at these names?
Not in a major way. So I think some of these stocks have become under-owned. So to that extent, some performance can come in. But the main issue with the cement sector for long-term investors is that the supply increase over the next 2-3 years is very, very huge. And although the demand uptick will be there, because of the supply increases, it will be tough for these companies to increase prices so much. So I think last week move was on the back of some increase in cement prices by 5 to 15 rupees. That was the buzz, and that created this upside. But we've seen over the last few months, companies have tried to increase prices, but they have not sustained because of the demand being a bit lower than expectations and supply obviously being very high in the market. So I think that will be the nagging issue for cement. So trading moves will keep on happening, but for the long term, it's tough to make a case.
Sure. Naresh, what is your reading on the charts, considering on Friday all of them jumped up?
So, still not very bullish on the cement pack as such, because what we are seeing is a little bit of an uptick, possibility of the GST rejig, etc. But the price action has seen some bit of a price action, but the volumes have not been great, and it's more like one would wait for another couple of sessions if that can follow up. So if you look at Ultratech cement, it came back closer to 7,300, very close to a new 6-month to 1-year high. So I would wait for, say, another 2 days of stocks sustaining above that 7,300 mark, then take a bet. Same is the case with Shri Cement. But in the cement pack, say, on the upside in terms of relative strength, it would be Ultratech and Shri Cements, and say from the bottom up, it could be Ambuja Cements. But I would still wait for a couple of days to actually look at a follow-up move.
Kunal, what's the view on Nestle post the kind of reaction that we saw to its numbers, a 3% downtick on Friday's trading session?
Well, it doesn't change the fact that the stock is still into a downward trend. In fact, the top was made for Nestle in the month of October when the stock was almost at 21,000 levels. From there, if you try and look at the trends, it's been a consistent downtrend for Nestle. And now, I think after Friday's downtick, the stock has hit the lower end of this channel pattern for itself. So it just reaffirms that the stock is still going into a drag or a downward trend. No major signs of breakdown as such on the charts. The major supports for Nestle is still I think 500, 600 points lower from Friday's closing. 18,350, 400 is where the previous swing low is for the stock which the stock had hit in the month of August, September 2022. So till the time the stock is trading about those levels, and if there is no major follow through of Friday's price action, we can expect that this support would hold on. But again, it's a chart which is still going into a drag or a very mild or a subtle kind of a downtrend rather than any major correction for itself.
What's your view, Sandeep, on Cipla and some of the other pharma majors? Cipla is going to be in the spotlight on the back of those US FDA inspections as well. Do you think it could be a major overhang?
Yeah, it will be an overhang, but I think what we've seen is that some of the larger companies which have been doing reasonably well have been able to sort of shed these concerns on the side. The US FDA inspection observations at some point of time, till a few years back, used to create much more volatility. Now that's come down. So I think preferred companies continue to be the larger ones like Sun Pharma, Cipla, and Dr. Reddy's, etc. So I think we just need to buy them slowly for whoever wants to allocate, because they are not stocks which typically move very fast on both sides.
We spend disproportionate amount of time discussing Reliance, and we've not discussed Reliance at all. 9 o'clock, 3 minutes away from the pre-open session. Kunal, Naresh, why is that you both have not said the word Reliance at all from the morning?
I already discussed Reliance. It was the first pick.
Oh, I missed that one. I was out of the studio. Okay. Naresh, did I miss Reliance, or you've not discussed it because of a reason?
The reason is simple. So I was discussing it for maybe 3-4 sessions at 2,300, 2,330. The stock has moved up to 2,450. So now at this prices, risk reward is not as great as it was, say, a few days back.
Some of the other energy heavyweights, and you were talking about ONGC, but let's get in a view then on some of the other stocks within this within the large cap space then. And Naresh, outlook on L&T, it was the top mover on the gainer side.
So another stock which I've been consistently discussing as one of the top picks in the capital goods space. And say if you look at capital goods space, we also need to realize that it is not just India. We have a Caterpillar or say a John Deere in the US making new 52-week and all-time highs, even when the markets are struggling there. In India, we've seen ABB Siemens do a very strong move. L&T being the largest of the names has not done much in comparison to the other names. So the stock was at 2050 when it topped out in 2022, and we are at 2200 today. So it's not done well over the last 1 year, 1.5 year as such. And now after breaking out about 2050, even in the Nifty corrections in the last couple of weeks, the stock has not broken the 2050 mark. So a base has been created. And the recent high was around 2250 to 2300. So ideally, I would expect this move to now go towards 2500 in the minimum case. So even at these prices, this looks the best bet in the capital goods space, and even in the Nifty. So L&T, although does not have a very high weight on the Nifty, but looks very promising as a leading stock from here on. So I would expect 2500, 2600 in the short term.
Have insurance stocks fallen enough? Do they warrant a buy, whether it's LIC or HDFC Life, or even for that matter ICICI Life and ICICI General Insurance? There was a lot of promise with insurance. There was a lot of belief that insurance will be the go-to sector, especially the health insurance pack, Star or ICICI, because post-COVID everybody was buying into their health insurance policy. Everybody was topping up the health insurance policies. But this is one sector where it's just been very disappointing for shareholders.
Yes, insurance sector has been the one which has always been sort of trying to rise but not risen as far as shareholder returns go. And I think post the budget, obviously they've been downgraded in earnings. So I think that pushes back the story. And what also happens is that in these times when there's general uncertainty, so for companies which will actually see significant reduction in growth, at least for the next 1 year before the base becomes such where they can again start growing, the investor interest will be low. So in my view that although the stocks have fallen, there are no triggers really for them to actually move substantially up.
Sandeep, considering that you track the healthcare space as well carefully, just wanted to understand whether it's hospitals versus diagnostics, because clearly one is seeing diagnostics as a cluster as well. The stocks have underperformed massively. Whereas, on the same hand, you have an Apollo Hospitals after the numbers, that stock has been on a zoom.
I think they are very different segments. Entry barriers into diagnostics are very low. And to that extent, competitive intensity has been increasing. They don't really have pricing power. And in an industry which grows at 5-7%, if you have new players coming to take market share, the growth becomes tough. I think that's the story of diagnostics. I think the stocks are still very overvalued vis-a-vis their fundamentals. Hospitals, on the other hand, have huge entry barriers. Like it's not easy to replicate either the brand or the infrastructure. And to that extent, they are very, very different from diagnostic companies. So margins have fallen from many of these hospitals over the last couple of quarters. All of these companies are now indicating that utilization and margins could improve going forward. And to that extent, there is a positive story. Valuation, I think, still are a bit stretched. So I think we need to see at what levels we need to buy.
Okay, thanks very much, Sandeep, for taking time out and joining in with your take on the markets. Flat as ever around the 17,960 mark for the pre-open rates this morning, with the Sensex down about 30 odd points, around 60,900 to 61,000. Let's find out mid-cap strategies. What is it that our chartists are betting on this morning? And Kunal, your top bet?
So I'll suggest a bond, ABFRL. I think over the last couple of weeks, I've been very bullish on the stock, expecting that the stock is forming a major base from a correction of 350 levels to 250. The stock has corrected amply enough, as well as the indicators have gone back into a deep oversold territory. So the risk reward is extremely attractive over here. Suggested buy for ABFRL, targets of 270, 275 range over the near term, stop loss at 254.
Okay, watch out for Aditya Birla Fashion. Kunal continues to give this one a big thumbs up. And Naresh, your mid-cap call?
So that would be a buy on Godrej Consumer Products Limited with a stop loss at 920 and a target price of 1050. The stock gave a cup and handle breakout of 920 mark a week or two back, and has held on to those levels for almost a week, and is relatively a better performer in the whole FMCG pack. The stock is on verge of a flag breakout as well, about 950. So a risk reward trade here could be the best stock in FMCG going forward. So expecting this to continue towards 1050.
Okay, let's also tell you what else is happening across the world. And Turkey has ended the rescue efforts in all provinces except the two hardest hit by last week's massive earthquakes that killed tens of thousands of people. The earthquake killed more than 46,000 people, and more than 84,000 buildings have either been severely damaged or collapsed. It also left more than 1 million people homeless, along with an economic cost expected to run into billions of dollars. Also, North Korea fired two more ballistic missiles off its east coast. The launches just come 2 days after North Korea fired an intercontinental ballistic missile into the sea off Japan's west coast. This prompted the United States to hold joint air exercises with South Korea and separately with Japan as well. Also, Twitter has announced that it will allow only paid subscribers to use text messages as a two-factor authentication method to secure their accounts. As per a statement issued by Twitter, starting March 20, 2023, only Twitter Blue subscribers will be able to use text messages as their two-factor authentication method.
Meantime, Meta is rolling out their new paid verification subscription service that's called Meta Verified. The CEO, Mark Zuckerberg, announced this in an Instagram update. So it's $11.99 a month on the web, and users on Meta's Instagram and Facebook platforms will be able to submit their government ID and get a blue verification badge. And back home, Reliance Industries chairman Mukesh Ambani visited Somnath Mahadev Temple in Gujarat on the occasion of Mahashivratri. He was seen offering his prayers along with his son Akash Ambani, and also donated 1.5 crore rupees to the Somnath Temple Trust. All right, let's get a move on then and focus in on the Khabar on D Street and BofA Securities, Morgan Stanley, and a lot talk about their global growth outlook as well as view on commodities and sectors that you should keep an eye out on. Pankaj is here with a quick summary. Pankaj.
So the key talking point this morning, Avan, has been what sort of EPS cuts or downgrades or upgrades have come in post the Q3 numbers from various strategists. So what I've done is collated what most of the people are saying in. First is BofA Securities, Amish Shah, who says he believes earnings cut could see further cuts as far as Q4 is concerned. It's the global growth that's the worry, and that's something which investors should take a note of. Slowing global growth can offset by softening commodity prices. So that's the first one. Morgan Stanley's Rhythm Desai says it's a beat as far as Q3 is concerned. This is despite weak margins. Broader markets have outperformed in Q3. However, they believe that earnings cycle in India, which started with COVID, is still intact. Better than expected Q3 or better than expected a tricky Q3 is something which the street should take positive views from. So that's what Morgan Stanley is also saying. Let's put up the next one, and that is Credit Suisse. Nilkant Mishra, he says, believes that risk to FY25 earnings are pretty low. IT and metals should do well or should be offsetting as far as any major earnings decline is concerned. Financials, cement and staples are the key to watch out for. And Surendra Goyal says downgrades through the earnings season continues. It's largely led by steel companies or material companies. However, auto, selective banking names continue to see better numbers.
So in your definition in this market where things are reasonably priced, what is cheap and attractive?
Two new sectors that we've been trying to bet on is particularly some of the defense and railway PSUs. And given the government's capex push in railways particularly, I think there's some very cheap stocks, I'll use that word advisedly, cheap stocks in the railway space. And if you notice the last few days, there's been a lot of noise of India becoming an export powerhouse in the defense sector.
Seven minutes to go, nothing whatsoever which is in the environment, I mean, is there which will generate upside momentum. We pretty much could start from where we left on Friday. No big numbers over the weekend, no triggers, nothing new in terms of any kind of a news or any update from any of the company which will even give individual stocks some kind of gap up or gap down. So Naresh, now that things are looking settled for Adani group of stocks, are we in for a good day or good week for those stocks, or could it be a flat week?
So I would still expect it to be a flat to boring week for Adani Enterprises, which has been in a problem zone. The only places where we can expect a bounce back is now Ambuja Cement. So we've seen a decent bounce back in Adani ports. So I would only be watching out for a bounce in Ambuja Cement. So closer to 340 to 330 still remains a good zone to look at Ambuja Cements.
Kunal, how would you approach Adani stocks, especially Ambuja and Adani ports?
Yeah, I think Adani Ports seems to have rallied. I think 424, 425 was the support for the stock. It's, I think, rallied up to 550, 560 plus over the last 2-3 weeks of this bounce back. But now I think the risk reward is not as lucrative to initiate a buy over here. Ambuja Cement, on the other hand, the stock after hitting I think 405 or 410 mark has slipped back towards 350 major support. So it's now doubling into the lower end of the support range. So I think closer to 350 mark would be a good level to initiate a buy on Ambuja Cement. But I think that's the only stock which looks relatively lucrative in terms of risk reward from most of the Adani group of stocks.
Naresh, we've discussed Reliance. Would you say that HDFC Bank also the risk reward ratio is now missing after the recent rally?
So I would say HDFC Bank is where the risk reward is still in place. The stock has gone nowhere for a long period of time, as well as say you go back to December, the stock was at 1650. You go back to January, you were at 1650. You can go back to November of this year, it was at 1650. And you can pick up any of the dates multiple times over the last 2.5 years. The stock has been at 1650 levels. The case is eventually I would expect it to break 1720 levels, and once that happens, it is a stock which could go to 2000, 2100. The stock has done nothing for 2.5 years. So technically, even in the near term, short term, the base is at 1550, 1600. So at 1650, you have a downside case of max of say 100 points or rather 50, 60 points. But if this over a period of next 3 to 6 months, the stock can go up 300 to 400 points. So it has a very good risk reward of 1:3, 1:5. And also the fact that you're buying HDFC Bank, which is not a stock which has a very high beta. So looks a very promising stock, and this is a stock which could actually drive the Nifty going forward in a big way. So extremely positive on HDFC Bank, and waiting for that momentum to kick in to actually keep adding positions.
Let's find out the index calls then. What is it that our chartists are advising? Remember, last week it was touch and go with the 18K mark. Didn't quite manage to surpass that level on Friday's trading session. We've got expiry going into this week as well. And it's a decisive hold call. That's what both of our chartists are advising this morning. Remember, they're talking about a pretty tight range that we're likely to be confined to. And that's exactly what the market moodometer reflects. Would be interesting to see what their call is on the Nifty Bank Index, owing to the fact that you did have some large caps that outperformed last week, supporting the overall index, but it's a whole call on the Nifty Bank as well. That's what the consensus call is. While our markets have managed to outperform in the week gone by, which remains to be seen whether or not that continues. There was a mild FII sell figure as well on Friday's trading session, and Nikunj, looks like now our tryst with 18K might be a little bit limited to just touch and go or flash in the pan moves.
Avan, for markets to go above 18,000, which has been the stubborn point, 18,100, 18,250, whatever that congestion zone and plus minus 100 points here or there, you need, and it's been a very stubborn resistance for us, you need something really big to break that glass ceiling, because time and again you've gone there, you've come back, you've gone there, you've come back. So it's not going to happen just because of technicals or just because of flows. I mean, something really has to change in the positioning of the market, which is FI positioning is short, FI's buying in the cash market is positive, DIs are buying in the cash market, but there are no large inflows which are currently there in any of the mid and the small cap stocks. So my point is that while on the downside you could say that whatever could go wrong has gone wrong and this market has not gone below key technical levels, similarly something new has to be there in the system, whether it is an event or a trigger which will surprise the market positively for markets to go past that important glass ceiling, because this entire congestion zone has now been bothering us, has been a stiff congestion zone for many weeks now. And typically for this kind of a zone to get out, either you need a lot of global support or you need something local. Next 2 weeks, there are no calendar events which will generate that kind of an upside momentum. My limited point is that you failing even to go to the budget levels. And if on the budget day the market sold off because of Adani group of stocks, then guess what? That storm is now settled. I'm not saying it's over, that storm is now settled. So then market should automatically recoup all those losses, but they are not doing it, which means it really needs a strong push. While the positioning of the market is such that everyone is on the same side of the board, but that trade of FI short in the FNO market, or where call writers and option writers are currently putting their bets, is not really working as per historical data. That's my limited point. So 7 seconds to go. We may be in for a very quiet or a dull day. You'll always get individual stocks, but even today also in terms of individual stocks, there are not too many which you would say are going to be generating a lot of upside momentum. First rates, just bear with me. I'm just going to load my Bloomberg screen to get the first rates. I go Nifty up 21 points, just 21 points, 15 points, 96 points up for the Nifty. Bank Nifty just not going anywhere. So we are just off to a very, very flattish kind of a start. City Network 1 rupee stock 3% higher. Yes Bank 16 rupee stock 0.5% higher. Adani Power 4% higher. You've got 2-3% higher for just very small stocks actually. Nothing which is even catching my attention. So Adani Enterprises down, Adani Power up. Cipla down because of that news development, 5% lower for Cipla. Adani Transmission down 4%. HDFC Bank flat, Reliance flat. Just it's a listless market, Avan. I mean, I can endlessly talk about it, but yeah, that's the screen.
Yeah, really struggling to find, any decisive moves on the upside at least. But let's take you through the newsmakers. That FTSE semi-annual review inclusions from the global large cap index include IDBI Bank, Union Bank, Indian Hotels, Shriram Finance, ACC, Kotak Bank among the lot. Exclusions 197 or Paytm, Biocon, Godrej Properties, and some interesting key inclusions from the mid-cap space include APL Apollo Tubes, Patanjali Foods and Vedant Fashion. So watch out for those three stocks as well in today's trading session. Yes, you do have Cipla, which is reeling under pressure. Just want to quickly revisit that name. Remember, the US FDA has issued 8 observations in Form 483. This is for the Indore manufacturing facility. Stock continuing to reel under pressure. Samvardhan Motherson has acquired SAS Auto System Technic for an EV of about 540 million euros, so watch out for that. United Breweries, the MD and CEO resigning. The Supreme Court as well has stayed a penalty of about 750 plus crores. That seems to be putting the stock in a little bit of a spot. Sun Pharma, meantime, acquiring minority stake in companies for about 180 crores. Minda and Precall, you've got Minda buying about 15% stake in Eidos Minerva and selling their Precall stake. Bandhan Bank, Biocon as well. Remember, they're going to be excluded from the Nifty 50 index, and ditto for Mphasis, Gland and Paytm. You've got Power Grid. They've been a successful bidder in interstate trans systems, so keep an eye out on that counter. And something like KC International, it's been a massive order win of about 3,000 plus crore rupees, one of the largest, and RITES has bagged new orders worth about 76 crores, so watch out for that. But Kunal, pretty much moving according to script. Yes, the breadth is in favor of the gaining side, but really struggling to find any names, right?
Yeah, struggling to find any major trends on the indices. Stock specific, yes, there are a lot of stocks which are looking attractive. Reliance Industries continues to be a stock which I would be bullish on. I think at 2,400 levels, 400, 420 approximately, I think is a good zone to buy the stock. So would maintain the bullish stance on Reliance and probably would up my targets from 2,500 to now 2,550, 2,580 mark.
Okay, Reliance Industries it is. That continues to be on Kunal's radar. I just want to quickly check in on where that stock is currently at, 2443. Let's move on then. And Naresh, what's catching your eye this morning?
So taking a risk-reward trade on Wipro, wherein at 403, that looks like a stock which can bounce back going forward. So keeping a strict stop loss at 398. Apart from that, nothing much in the markets. It's almost a flat market across all the indices.